Good morning, traders. Today is Tuesday, and here's your market briefing covering the US dollar index, WTI crude oil, spot gold, and dollar yen pair. So let's start with the US dollar index. The US dollar index remained under pressure on Monday, hovering just below 97 after briefly touching a low of 96.79, which is its weakest level since February 2022. This continued decline reflects a more dovish Fed outlook, fiscal worries, and trade uncertainty. And markets are closely watching this week's US employment data, which could reveal signs of labor market softness and reinforce expectations for a possible rate cut in July. While the Fed has cited strong job growth as a reason to stay patient, a weaker June figures might push policymakers towards an earlier move. And attention is also on a large tax and spending bill in the Senate, expected to add 3.3 trillion to national debt and further weigh on dollar sentiment. And on the geopolitical side, the Israel-Iran ceasefire remains in place, reducing safe haven demand. And technically, the dollar index has dropped over 12% from this year, above 110. The daily RSI is around 32, suggesting oversold conditions, while the ADX signals weak trend strength. If the 97 levels breaks decisively, the next targets are 95.13. And on the upside, the initial resistance sits at 98, with a stronger recovery potentially open a retest of psychological 100 mark. And moving to crude oil, the WTI crude oil prices are consolidating around 64.5 per barrel, having fallen sharply in recent sections. WTI dropped more than 12% last week following the Israel-Iran ceasefire, with immediate downward momentum further fueled by reports that the OPEC plans to increase production by 411,000 barrels per day in August. And this move is seen as an attempt by Saudi Arabia to reassert leadership within OPEC, amid frustration over repeated quota breaches by some members. And despite facing declining oil prices, Saudi Arabia appears intent on maintaining market share even at the cost of lower revenues in the near term. And on the technical side, WTI managed a quick rebound last week after slipping below the key 64 level support, briefly touching 63.72. The prices are now attempting to reclaim the 65 level and the 30-day moving average around 65.16. And the RSI remains stuck between 45 and 47, reflecting hesitant sentiment. A sustained break above 65 could open the door towards 67.53. However, if prices slip below 64 again, further downside towards 63 or even 62.2 is possible. Now, let's talk about gold. Gold saw some recovery on Monday after falling to a monthly low near 32.45 per ounce, later rebounding back to around 3300. The rebound reflects fading safe haven demand as risk appetite improved on the back of the Israel-Iran ceasefire alongside optimistic trade developments. And the markets are also watching closely comments from the major central bank governors this week, including Powell, Lagarde, Bailey, Uda, as well as US non-farm payroll data. And additionally, speculation around Powell's potential resignation could create unexpected market ripples. And from a technical perspective, gold remains a generally bullish structure on a daily chart, holding above the important 3200 support and its 8-day moving average. However, the RSI remains below neutral at around 46, suggesting limited upward momentum for now. Initial resistance lies at 3300, followed by the 34-day moving average near 3324, and finally, the June high at 3350. On the downside, a decisive break below 3245 could lead to a further slide toward the psychological level at 3200. And finally, the dollar yen. The dollar yen weakened to around 144 on Monday as the dollar's broader weakness continued. The pair has briefly climbed last week towards the 148 level but failed to sustain gains, triggering profit taking and a deeper pullback. Domestic data in Japan showed weaker than expected industrial output for May, pressured by US tariffs and challenging trade environment. The upcoming Tenkan survey will offer more insight into Japanese corporate sentiment. And meanwhile, trade talks between Washington and Tokyo remains tense, particularly around the 25% tariffs on Japanese auto inputs. And technically, the MACD shows fading momentum and pair has retreated below its 20-day moving average at 145.63, which now acts as resistance. A move below 144 could open the door for further declines towards 143.75 and even the psychological 143 level. And on the upside, reclaiming levels above 145 and 145.78 would be needed to revive the bullish momentum and potentially retest the 146 or higher. And that's your market briefing for today. Stay tuned for further updates as we approach key US economic releases and global central bank commentary later this week. Trade smart and have a great day.